Put down your eggnog and get out your stock trader network notebook. We got a lot to talk about today, folks. Market's down. We got, futures are trading red, but Triple D, he's just looking at cup and handles everywhere. I can't keep him in his bullish chair. So we'll identify those 90-day patterns. We'll talk about the absolute craziness in the metals markets. Not much earnings or econ data to discuss. So it's a good day to have Tommy Lackey Jr. on 8:35. He's going to come on and share his charts and his perspectives of the market. Heading into the new year, we were going to have another guest, but he canceled. That was Santa Claus. Looks like the Santa Claus rally might be off, folks. Here we are in day 3. But we're going to get started right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Hey, good morning, traders and investors. Starting out in the red, 18.5 handles, 69, 60, 75 after a quiet day on Friday. Let's see if we can regain that momentum from last week. We have the buck trading up 14 cents at 97.84. TLT just hanging out here, down a few pennies, 87.12. USO up 57 cents, 69.05. GLD all over the place here, folks. We'll talk about the wild price action in GLD and silver. Futures getting up over $80. But what you have right now is GLD down 6.51 at 410.23. SLV down 2.91 at 68.21. And Bitcoin, it just doesn't want to participate in the volatility. That's down $330 at 87,630. Let's bring it. Well, first we got to talk about TradeStation here. Born to trade, chart, analyze, customize, all in one platform. Big shout out to our sponsors down there in Florida, TradeStation. They're going to be helping us navigate this tricky 2026 trading and investing year. We'll bring on Dennis here and ask Dennis the most important question of all. How was Boxing Day?
A lot of people over. I think there was 65 people over at our house, so I didn't actually do a weekend trade, and I think it actually saved me because normally I do a lot of the retail darlings like the Teslas and the SoFis. I take them long over the weekend. I had so many people over that I didn't have a chance to go and actually execute. I was starting just after 10 o'clock, starting to get ready for the big party there, and didn't really trade too much on – I'm losing track of days here. I guess it would have been Friday, yeah. Yes, so that's correct. So didn't have a chance to put the weekend trade on, and the trading gods looked down on me and smiled and said, you know what, you separate yourself. Because I really considered at 350, like leaving the party and going and putting on the weekend trade. I was like, should I go do it? I was going to do it from my phone. I was like, you know what, you got to separate it. You can be a big boy now. You don't have to trade every single day. So I separated. I did not put the weekend trade on. I think it'd be hard to say because we were kind of flat last night. So maybe you could have got out of some stocks last night. But today, the weekend trade not working. So it's worked, I think, 14 out of 17 times. But if you're holding into today, stocks like Tesla down significantly, Micron, Applied Materials, a bit of a tech wreck here this morning, Joel. The chart patterns don't look that bad, but a bit of a tech wreck. Let's bring in the Brentster here to ask, first of all, how was your weekend? And then secondly, thoughts.
Weekend was good. It was chill. Hung out at home. Still kind of getting back into the swing of things after being away for so long. But yeah, it was chill. Relaxing.
And then as we come in, sometimes it's great. You're the news guy here, but you're sitting back, following the markets really closely here. And it's been a pretty good 2025. It hasn't been as good as some of the previous years, but we started the year really bad. And if you were just buying stocks in April, this has been a pretty fabulous year, especially if you were selling in November. April to November was really good for a lot of these momentum names. But what are your thoughts in the background? Just, finishing the year, what are your thoughts on 2025? I'm throwing you under the bus.
Yeah, it's okay. I like that. I think I think 2025 was not the most difficult year of trading. It seemed like from the
Smooth up,
background.
smooth down, or
Yeah,
smooth down, smooth up.
a little. I
Kind
mean,
of.
there was definitely I think it was choppier at the beginning of the year. I think things got a little bit easier going into the second half. But like you were saying, I mean, I'm personally not trading, so But maybe that's kind of a unique position to be.
That's
Like,
why I like to ask you every once in a while. You're breaking our news. You're not a trader, but you're a news guy. You're the digger. You understand the market so well. Sometimes it's just from that side perspective, like where you're not, like got the money in it. Sometimes that can give you more
exactly.
clarity, actually, too. Because I'm trying to get a feel for 2026. Like that's why I ask, because I'm cloudy on 2026. I don't know. Part of me wants to be really bullish, and then part of me thinks like everybody else is too bullish.
Yeah. I think it was like more orderly towards the last quarter of the year. I think you said the word choppy a lot more in like the beginning and middle of the year. How is that setting up for 2026? I think that's a good teaser for mentioning that later this week we are going to be doing sort of like our 2026 rundown. We're going to be coming up with some acronyms for some stock picks. Maybe it doesn't have to be an acronym, Dennis. I know you were kind of like
I do an acronym. I've done one for the
you
last 2 years. I'll do one again. Joel's done them too. Joel doesn't like doing it just as much as I don't like doing, quizzes early in the morning. Joel doesn't like doing acronyms. But Brentster, if you want to do one too, we'll throw it in there. And traders in our
I'll
chat
probably
room,
do one.
if you guys want to come up with an acronym, we'll listen to them. I want to hear your stock picks. I want to come out and hear what you guys think about 2026 because it's right now, people are pretty bullish. People are saying Bitcoin's going to bounce back. AI is going to take over. Nvidia's going to the moon. The analysts are pretty bullish, but they're always bullish. I mean, I think I'll tell you one thing is I don't think it's going to be driven as much by like chat GPT and the AI trade as 2025 and maybe 2024 were. I don't think Nvidia leads the way in 2026. So that's what I'll tease. I think there's going to be new leadership. Not that Nvidia is not going to be a leader, but it just needs a year of pause, a year to catch up because it has just gone so, we're up in 2 years in Nvidia. We're up like 1,000%. Like let's go. Well, let's get the actual math. Going back into, and Joel, you can put your charts up there if you want. But if we go back to like 2023, the stock was
Okay.
$19. So literally, I guess it's more than 2 years. In 3 years, we are up 1,000%.
That's nuts. That's crazy.
It's and when you give that perspective, you think it's just going up another 1,000%. I don't know. I think there's going to be other stocks. That's what I think. So I think it's going to be the year and I really think this value rally we've had in the last 2 to 3 months is something that might actually continue into 2026, especially with interest rates coming down, and they will in the second half. If they don't come down off the bat because Powell is still in there, they will come down the second half because whoever the new Fed chair is, they are going to be a dove. Trump already said the new Fed chair is going to love lower interest rates, and they are going to lower interest rates, and he thought significantly. Trump is going to push and obviously make sure the next Fed chair is a dove, and that's good for a lot of stocks.
Cautious.
Joel's cautious.
Yep. I think going into every year you look at like what the catalysts are, potential catalysts, but I think what this market has come to and what it is evolved to is the catalyst is just the latest thing coming off the tape. What tweets and true socials and tantrum tantrums and it's just we're at the whim. We're at the whim of social media and the headlines. And I have no way to predict what the headlines are going to be in 2026.
I mean, I think it's still going to be the year of physical AI. I think we're going to hear a lot about humanoids from other companies, not just Tesla. We're going to hear more about self-driving cars. It's going to be a lot of physical AI talk. And don't kid yourself, the AI talk is still going to be all over the media. I just think the stocks, maybe are a lot of them are fully valued at this point in time, where they need a cooling period. I mean, Nvidia. I still own Nvidia in my long-term portfolio. So I'm not saying short it. I'm not saying that whatsoever. but expecting another like 100% gain from Nvidia this year, I don't think it's happening. I think it's too big of a company now. The market cap, would take it to $10 trillion. If you were to double again, and it's even 20, 30%, that would be a good year. I think there's places where I think this market is very, very concentrated in technology. I think people are still concentrated. Like I was seeing everybody's 2026 picks, and they look like everybody's 2025 picks. They look like everybody's 2024 picks. People are all in the same stocks. They're all in the same stocks here. Oh, I like that acronym. Mars.
I like that one. We have such a smart chat. I've been putting some of the chat's comments up on screen, and it's just like a lot of good perspective. Together, we are better.
And Mars. It's somewhat, well, it's not really diverse, but at least you got a drug in there. So drug in space. I mean, the SpaceX IPO, that's going to be fun for sure. Is that going to drive stocks like ASTS, Rocket Lab to you? Maybe. I mean, these stocks have had incredible Decembers. They've really been moving here. So these are storied stocks, some of these storied stocks, not Merck. Merck's more of a value name. I actually like Merck a lot, from a value perspective, but it's going to be interesting. So keep throwing us your acronym. You come up with them. I've picked right now 1, 2, 3 stocks for my acronym. I don't have the fourth one yet, but I'm trying to put the letters together because last year I had fade last year, which actually worked out well. I had fade was the fade trade, so F and fade was selling rips and buying dips, and I mean that worked really well because we had the big sell-off in April and the big run-up, and we've had lots of chop in between. So fade trades worked pretty well. It kind of was a contrarian year with lots of pockets of momentum as well. In the middle of the year after April, a lot of momentum to the upside. But then I also had AMD. AMD was great. I had the D, and my fade trade was Dell. That was doing great, but sold off towards the end of the year. And then the E was one that I was like, I needed an E. I kind of like the valuation in Etsy, and I put Etsy in there, and it had a good year too, but then sold off towards the end. I actually sold it, and I've rebought it. Now it's not going to be in my 2026 acronym there, but I'm long the stock.
So last year, Dennis, you made the theme, you made the acronym, and then you kind of fit the circles into the square.
Kind of a
whatever
cheating way to do it.
Whatever,
I guess.
It works.
Cheating, but you should pick your stocks and then make out of it. So, we'll see where we go this year. But I'll tell you right now, I have one really tough letter, and I've got to figure out. I don't.
Okay, I have. I'm gonna. If you're gonna force me to do it, yes, I'm gonna come up. It's not gonna be your conventional acronym. It's gonna be more overall themes and indicators, and I'll tell you what some of the factors are gonna be. Where we at in this AI bubble tech valuations. I mean,
I think we're too high.
Okay. All right. And that leads into market concentration, right? And rotation. So that, that favors what Dennis is talking about. And another thing that I'll probably include in it, and it's undeniable that we're in a macro slowdown in the jobs market. The jobs market is indicating that. And the housing market is indicating that. So those are the factors that I'm going to put together. And I have one stock of the year that I think will be probably the most determinant of the price action.
Oh, so you've got one stock that you like right now.
I don't like any stocks. I don't like any stocks.
Joel, you can do a full short. You did short last year to a certain extent too, which you looked really good until April. Your acronym from last year was punk, and you had a lot of shorts in there, and you had some really good shorts in there too, actually. And like I said, you were really good till April. But again, the theme, Money Mitch just said it. Theme matters. My theme, I'll tell you right now what my theme is going to be for 2026, and it's interest rate sensitive stocks.
Yeah,
that is going to be my theme for 2026. And why? Because I believe that the Fed, especially in the second half, is going to lower rates substantially. That's going to be good for stocks, but it's going to be good for a lot of stocks that haven't been that great in the last few years because interest rates have been elevated. So, and I don't know if it's going to be in my acronym or not, but I've recently bought Rocket, because I'm like, interest rate sensitive stocks, Rocket likes lower rates. Rocket loves rates going down. So, I'm long that stock, RKT. So Money Mitch saying it's on his radar too. Also, we had Luke Jacoby on here. He likes UWMC. I bought some of that one too. Kind of the same thing. I think Rocket's best of breed, but UWMC has a little dividend and stuff. That one's been going down. Could that turn around in 2026? I think so. I'm along that one too. I'm bigger in Rocket though. I'm more convicted in Rocket because I think it's best of breed. But those are two stocks that definitely will benefit if interest rates actually do go lower. Now, if you think interest rates are already low enough, and Powell, you might have a tough start because Powell isn't necessarily going to lower rates in January. We don't have rate cuts imminent here. But I think towards the second half of the year, and also I'm doing an acronym for the full year here, so it's a hard thing to figure out. I think in the second half, interest rates are going to take hold and people are going to be like, oh, rates are going lower. We need to be long stocks and we need to be long specific stocks because technology stocks aren't as sensitive to interest rates as a lot of other companies, obviously. Home builders, very sensitive to rates. Banks do well. Regional banks do well. JC Press was showing, the chart of regional banks looking pretty good, which I retweeted over the weekend here. I mean, that's a theme that, these stocks have lagged significantly here because of higher rates. Is there a turnaround imminent, for the banking sector? In the second half of the year, I think so. Again, the first quarter, we still have Powell, maybe not. But once rates start actually going down, like more significantly there, and they will under the new chair, it's going to be good for a lot of stocks that have been lagging this market.
That was a nice little way to take the audience through how we're thinking about picking these things. I don't know that we've done this before, but Dennis was saying it, chat, and you're doing it already, but let us know what you're thinking with some of these ones. We had a lot of good ones. We had some inappropriate ones, and we had a lot of good ones also. And maybe the inappropriate ones were good. I don't know.
Maybe. To the news for the day, and there's not a lot of news here. Obviously, a lot of the northern part of the country and southern part of Canada experienced bad ice storm. It's not as bad as it was supposed to be up here. Like we were talking about trees falling. I think, we've warmed up a little bit here, so some of the ice has melted off the trees, and now we're in a windstorm here. But we did have some airlines canceling flights, Joel. So we did see the Jets was trading down earlier. It's coming back here now. But, a little bit of concerns with the ice storm here, but I don't see anything. It doesn't seem as bad, like in certain pockets, maybe it is. But up where I'm at, they were saying it was going to be like, they had a cyclone thing, winter going. It was like, going to be one of the worst days ever. It doesn't seem that bad, although we do have some wind here today. An icy wind, sometimes that can get interesting. But, airlines, talk airlines for a second here because, the travel trade, obviously you have a lot of airlines that, benefit from more travel around the holiday season, but flights cancellations are never a good thing.
Yeah, well, those tickets are already paid for, right? I mean, it's going to cause a little bit of chaos, right? A little bit of rerouting, a lot of different things. So those are headline things. But the airlines ended up having a good year. The consumer is still showing some strength here, traveling. Frank Holmes, the digital nomad. So I know that's a bad tick in the Jets ETF, but the consumer still looking strong as far as the airlines and flying. I'm just looking at Delta because that's the one that I like to follow closely. Came back, clawed back to a new all-time high. Broke out over $70, been building a base over 70 for the better month of December. So let's just stay up here. Let's build the base and continue to break out. So that's a look at Delta, and the cruise lines have still done pretty well, right? Not a bad year. 2025, of course, you got to take everything in the perspective of the April dip that we had. It's a good buying opportunity. Now right back up, not all-time highs. We know about the dilution problem with
Carnival really sold off after COVID too. So RCL though has come back a long ways too, although in the last couple months, obviously weakness there. So cruise lines, airlines, these benefit from lower rates too. The question is, and I'm doing a full acronym for the year, is when you strike, because chat pointing out very much, the recent weakness here is probably because we're probably not getting a January cut. So people might just join the show right now, might be saying, Denny, what are you talking about? Interest rates might be done going down. They're done going down maybe for now. But once Powell is gone, the new Fed chair is going to come in and they're going to go. So second half, these are almost like second half trades. Like, can we go out probabilities
Yeah.
for farther than that, which
Yeah,
would be
what you-
interesting to look at?
Yeah,
Because
what you want.
I do believe we're not going to get a rate cut in January. I don't think it's going to happen. I think Powell's done at this point in time, but Powell will be gone eventually. So let's just go out to like January 2027. Like, where are they
Okay.
projecting them, 1 year from now?
Okay, let's see. Okay, so right now we are at, consider right
350.
now we are at 350 to 375.
Yeah.
So this would be 2 more 25 basis point rate cuts. Did I do that right? That's 30%.
Yes.
And obviously going out this far, the odds are spread out. So this is not what we are normally looking at, just to give a little warning. But yeah, you can click to all of
Keep that
these
up there.
different dates.
Keep that up there for a second too before
Okay,
you
sure,
do
no
that,
problem.
because it's just a great chart. And I think we are underestimating. I think that this tool here is obviously investors' consensus opinions, but I think we are really underestimating the dovishness of the new chair. Trump is going to really push for rates to come a lot lower than 50 basis points. I think we're going to be over 100 basis points lower by January. So I am with that 13% crowd. That is
Down
where
over
I am.
here.
I think
Yep.
we're 100 basis points lower come
Yep.
this time next year.
1%.
And what does that mean for stocks as a long-term investor? And we're putting on a long-term investing hat right now. Like long-term, a year out. Analyst targets a year out. I think the correct to say 0.1% chance of them going up. Interest rates are not going up. Are they? Well, unless something, inflation just goes crazy before Powell's out. Because even if inflation goes high in the second half, new Fed chair is going to be a dove and isn't going to matter. So I think I'm with the 250 to 275 camp, that 13%. That's where my vote would be 1 year from now, a full 100 basis points lower, and maybe even more. I don't know if I want to go as far as the 3.9%ers, but I would lean on, and I'm going to position my long-term portfolio more for lower rates for longer here now, because new Fed chair is going to come in for a while. If they are a dove, rates are going to stay down, and they're going to want to stay down. And even if we do see some inflation, they're going to be hesitant to raise, for the simple reason is that Trump is going to be really pissed off if they raise. So Trump controlling interest rates in the way of a new Fed chair that's going to be dovish. And I think the market is not pricing that in enough. If it's only pricing in a 50 basis point cut, it's an opportunity for us, I believe.
4 cuts would be very aggressive. 2 seems like the norm, so it'll probably be like right around 3.
And that's what the market's saying is
Yeah.
the norm. 2 more.
Yep.
Yeah.
Yep.
Not getting January. When is Powell officially gone? The date? Do we actually
We always
know?
ask that.
I always ask and I
it's
always
May.
forget. I have a goldfish
think it's
memory. I only
May.
remember for 6 seconds.
Let me look. I think it's
Powell
May.
officially gone. Do we have date? I'm asking Gemini. Can Gemini figure it out? May 2026. He is currently serving his second 4-year term, which is scheduled to end in May of 2026. So we have him until May. So we may actually see interest rates not go down until May. So this might be a trade you want to park, and sit back, because we're going to do an acronym and, come out and say, I think, rates. But again, if you believe the market looks forward, the market could start to like some of these stocks too. So it's a tricky trade to start the year for sure. So, but I do think second half, we're going to be talking about rates a lot lower. And that means I don't want to be short stocks. You're going to have opportunities as a trader, put the trader cap back on, sure. But as a long-term investor here, I never want to be short stocks. And I especially don't want to be short in a year that the consensus opinion is that interest rates are going to be much lower by the end of the year, 50, 100. Keep all that in mind.
I feel like the last time Blue Putnam was on, he was kind of leaning toward having a pause in the cut cycle being favorable. He was like, the Fed can hang out. The Fed doesn't have to do anything.
I think they do.
So even if we had a little bit of a pause, midway through the year, the 4th, 5th, 6th month of the year, I feel like that's probably going to be a favorable thing for the economy to kind of let things settle in, see how things shake out. I think that might be, helpful for traders and investors if we had a little bit of a pause here.
I think that's what's going to happen. I think Powell thinks that as well. And Powell doesn't like being pushed around. We know that. And he's like, I've been pushed around to a certain extent here, but, I do see the jobs data and he's seen some economic data. And they've given us, what have we had? 3 cuts? Has it been 3?
We've had
2, 3, I forget. 3?
4?
I think it's been 3.
3?
It's 2 or 3. I think it's been 3. So I think he's 3 and done for his term. And again, we don't know if it's going to be pressure, but I think the next Fed chair in the second half is going to be like, now we're lowering rates. Now we want to get. I mean, Trump's talking about a GDP at 25%. Obviously that's never, ever, 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 ever going to happen. But it's telling you how aggressive he wants to be with trying to grow the economy, and you do that by lowering rates. So if you want to just grow at any expense, and that's what we're really talking about, growth at any expense, when you're not going to worry about inflation or anything like that. I mean, that's interest rate cuts. They're coming in the second half.
I wonder if the current Fed has to account for the pace at the end of this year. Like, if is the current Fed going like, oh, it's going to be a lot, right? That's probably a thing.
Yeah.
If I had to guess, I would say.
And we're thinking out loud here. So you're making me think like, I don't want to just be too early on this trade either.
Good
where
point.
You jump in all these. If you're a long-term investor and you think interest rates can be down for 4 years. Well, you could be a little bit early, but as a trader, you don't want to be too early, because that is a fantastic point that Brenster just made. If Powell's thinking like we're thinking, that the next Fed chair is going to be a dove, we better keep interest rates a little bit more elevated for longer for two reasons. One is, we don't want inflation creeping back in by doing, but two is then we can say, I told you so. If like all of a sudden, they lower rates and inflation starts coming back in the second half, that Fed chair can say, see, we were right. We wanted to stay. So I think you're right. I think this Fed stands pat, at least for the first month or two. We get to March, April, we're going to get more data, but I see no cut in January. So I'm not sure. Tell me, chat, what do you think that, impacts the markets? Because there's right now an 80% chance goes to 100. Do stocks go down? Do we have a rough January? That could be the setup. Right. We could have a rough January. Lots to consider here.
Also, a couple facts, and this is going in with what you said, Dennis. We are going into a midterm election year, which have historically produced lower returns than the market. And 58% of the midterm years, it's like half and half. I mean, it's not a given. And the factors that you're talking about, in the first and second half of the year, the first 2 quarters, without an interest rate cut, I think, we'll see if we can maintain this robust momentum. But I think the uncertainty of where the rates are going to, when the cuts are coming. Also, who knows what's going to happen in Washington in November. I mean, it is not a slam dunk on, any sides of the spectrum here.
Yeah.
So a couple big factors, the season, well, not so much seasonality, but, markets performance and presidential cycle. The midterm years do not usually produce the best returns. And the scenario you're setting up is so the first half of the year maybe even reinforces that. Maybe we get some volatility.
First half dicey, second half.
And then coming strong in the second half.
Like maybe like the whole like we talk about like check mark. Maybe a little bit of weakness, first half, people throwing in the towel, and then bang, we blast off in the second year. Because and why do we talk interest rates? Like people get bored, interest rates, I just look at charts. I don't need to know about interest rates. You want to know why? Because interest rates actually do matter, and they dictate course of action. Because if you would have come in on the cues and bring up the chart, Joel, it's because we just want to prove our point here. The Powell, I'm going to call him the Powell, started talking about raising rates at the end of 2021. The cues topped out right then, and they went down for a year and a half. The SPY, same story there. Same exact chart, S&Ps, weak. So if you were just listening to Powell, that we are going to start raising rates in 2022, and I believe the first one was either like right around early 22 or late 2021, and you just followed that, you did really well, because we had a bad year and a half in the markets. So that's why it matters, folks. It does dictate the course, even though we get lost in the day-to-day headline action. Overall, interest rate policy really impacts stocks more than anything. It really, really does. It might be the number one factor for stocks. So just understanding that if we can kind of project interest rates out for the year, which means, not really lowering, maybe, just kind of staying, where we are. But then in the second half, it makes us more ready. So what I'm saying is, I don't want to be super bearish into 2026, but I don't want to be too early in 2026 either. So it's just trying to give us clarity here, and that's why it matters. But let's take it back to trading here, unless you got something else to say, because we've been talking about this for a while. And I've been looking at charts over the weekend. I don't normally do that, but I was looking at charts last night, charts this morning. And we'll talk to silver action here after Tommy, but I want to bring it into technicals because Tommy Lackey's coming on here, and he's a great technical analyst, so I want to start this conversation now. There's cup and handles all over the place. Cup and handle typically is one of your more bullish patterns. Now, I'm not a big chartist, but I was like, you notice these when they stand out like a sore thumb. And if you look, you've got Alibaba on there right now. Now, again, today's trading action going to put a little bit of hole in some of these because we got Alibaba down $4. But, I'm looking, and you got to blow up that right chart here, Joel. And we're going to get Tommy's thoughts on this after, too. Like, you got to make that almost full screen. And we're going to see if we can vote off the island, the multi-chart system. But if you can go in there a little bit more, it's harder to see on that chart than it's. Can you do 90? You can't get any closer than that. Do Oracle. Oracle stands out more. You can see what I'm talking about. Do Oracle. See the little bottom, circle it, go down there and look at the recent pricing action. I'm looking at the recent pricing action right there. On my charts, I can see it a little bit, and we got to just get a different time frame because you're just out too far with that time frame. But full cup and handle right there. I mean, if you could go to 90 days,
all right, I'll go to 90 days. Customize.
We change everything.
Yep.
So I'm trying to make a point here.
Here's exactly 90 days.
Okay, perfect. Bottom right. We bottomed. Now we're showing a little bit of life. I've got Oracle. I was looking at Meta. A little bit of a cup and handle happening here. I was looking at Microsoft. A little bit of a cup and handle here. Microsoft, same thing. I mean, these aren't super bearish patterns here. XYZ, bigger cup and handle, a little more pronounced. Not that I love this stock, but I'm just showing chart patterns here. I mean, we've sold off, we've come, and now we've been consolidating here at the upper part of the range. Not necessarily a bearish thing here. So what do a lot of these stocks have in common? Well, some of them have actually been not really, we're not up to highs. Like, these aren't stocks that have just been exploding and going up. And it's showing you that, hey, maybe we're ready to rotate once again. I mean, we know NVIDIA has been marching here towards the end of the year. We know Tesla's sitting up here near its, highs. There's been a lot of stocks moving here, but Microsoft's been a laggard in the last 2 months. We're starting to show a little bit of stop going down and consolidating up near the highs, which isn't necessarily a bad thing. And I want to bring Tommy Lackey into this conversation here. So let's run our guest intro here because he's great with the technicals.
There he is, Tommy Lackey Jr. at GT Lackey on Twitter, Relative Capital Advisors. Tommy, how you doing today?
I'm doing great, guys. How about y'all?
We're doing good. So glad to have you on this morning. Happy holidays to you. So you hopped on a little bit early talking about the cup and handle. I'll just make one quick comment about it, and I'll let you take away with your charts and your technical analysis. The nice thing about it is that you have a setup, but you also have some exits, right? If you have a cup and handle and then you break out, well, if you break the handle, then, you're going back to the bottom of the cup. But talk about that tech pattern, what you seeing out there, Tommy.
Well, before I say that, I just want to tell Dennis, thank you very much for the Christmas present of staying on today. I'm so excited that you're staying with us and I get to talk to both y'all. Nothing against you, Joel. I just have noticed that Dennis always likes to take off when I slide in.
Like I've done at 10. And Tommy
so
comes
happy
in.
that he's here.
Tommy comes in our room at 10, and then I'm done at 10, and I got to hop, or my wife's going to kill me here because I've got stuff to do, obviously, as well. So usually I pack it up because I'm 6:30 to 10, and then I have my break at 10. So Tommy, you just come on at bad times, but I always want to talk to Tommy, and I'm excited to talk to you again, obviously, today, too. Now, I'm very confused going into this 2026. I'm mixed. So part of me says some stocks seem to be a little bit, like we've just maybe too crowded to a certain extent. And we've seen some of that come off in the last month or two. But there's so many other charts that are looking productive. Like we're seeing, rotation happening. Value had a pretty good last couple of months, some of the value names. It's been really kind of, rotation, keeping the S&Ps up near the highs. Because the S&Ps are near the highs. We made new all-time highs 2 days ago. So that's all good. But it has been the same stocks leading the way here. Now, what for 2026? Do you think, when you're looking at your charts here, do you think it's going to be the AI year again? Because that's what everybody is calling. I'm kind of more in the value camp here. I think it could be a more year of like some of these laggard value names. holding us up. What are your thoughts?
I think you're thinking way too far ahead.
Okay. Good.
Honestly, I think we've got to get through, I believe, where we're at right now, because we've had a lot of a shakeup here and there over the last month or so in a lot of different of the hot areas, things like that. And then I also feel like we got to get past the first of the year and see kind of who shakes out and where the positioning comes in, because I agree with you. When I look at this same Oracle chart on a 65-minute time frame, you really do. You have a great cup and handle here developing on that level. Now, again, you're a lot more like me, Dennis, to where most people are going to be looking for that cup and handle on a daily chart, but a chart's a chart. It's just a matter of the time frame has really nothing to do with the pattern, other than the shorter the time frame, the faster it plays out one way or the other. So from that stance, I think you definitely are in the right place and looking at the right idea, but I'm kind of with y'all to where I'm not 100% sure how the year is going to start. I am, one level of me has some concern that a lot of the things people didn't want to take profits on at the end of the year, or you might have a tough January. And then a lot of the stuff that gets beat up might be able to be in play for a little while, but how far that goes, I just don't think we know right now. While I think you're exactly right that we've seen a lot more play in, and I have to put in quotes, value, because I think that's a real slippery slope depending on what areas you're looking at. But yes, I believe that we're in a position to where, I added to some industrial type, defense type ETF this last couple of weeks for my clients in their portfolios, just thinking that, I'm of the opinion that AI really is a game changer. And I want to get to that in a minute, the parts that I think we might be discounting. But at the same time, I don't want to sound like a Pollyanna, because I really feel like we can have a pretty bumpy ride towards the beginning of the year. And then I do believe that this economy is strong enough, the consumer's strong enough, unless someone does something really bad, it's probably going to pull its way through pretty well. But there needs to be more of that rotation. But the broadening we've seen in the markets as a whole over this last quarter, when things like Oracle and Microsoft and Meta and all those aren't participating, that can go one of two ways. That can go a way as that's a break. People got out of them. If they had losses, their 30 days are up, all of that. And those could do great in January. Or you could have larger institutions that say, we've been riding this train for 7 or 8 years. The markets are finally starting to break out or broaden out for the first time in a while. So let's look at some of these other areas. Let's see where there is some value based on the entity, not based on the characteristic, if that makes sense. And honestly, my view is if AI is as big as I believe it really is going to be, while the money that's been so heavily positioned in the front end of it is working its way out, I believe we're going to see, and this moves on to something I heard you say a minute ago, which I'll get to about GDP. I believe where we are now is that there are a lot of ancillary sectors and industries that are adopting AI as fast as they can to reduce cost within their businesses and to increase productivity.
For sure.
I think that we should be very conscious and pay attention. It's only one number, but we really need to pay attention to that 4.2 GDP we got. Because while I'm not betting or saying I think we're going there tomorrow, there really is a likelihood of double-digit GDP.
Wow.
It hits a lot stronger than people think. Not forever, but for a quarter or two. And what does that do? How do you have to rework your numbers if you're a corporation that's trying to do their financial projections, if that even happens once? Not, if it happens once and then it stays at 3% because of that higher level of productivity, do you really think that's in the numbers right now?
No.
Now, it may be why feel so overvalued is because that's actually starting to happen and we're just not ready for it. Now, that's the bullish best case scenario. No doubt. I'm not saying it's not, I'm just saying don't close your eyes to it, because I don't think anybody expected a 4.3 GDP popping out last week from a huge level. And so I think you really have to stop and say that while, yes, there can be some overinvestment and some giddiness in the front end of AI, if it's actually seeping its way in, then you're in a scenario to where, I mean, it's just almost unheard of to where what it can do for productivity gains. I heard years ago that the average company's margins are about 11%, I think. You know, I heard people say about 3 years ago, before we even believed in the power we're seeing today this quickly, say that it would add 3 to 5% to margins across the entire economy. Well, 3 to 5% on top of 11 brings us to 15 to 16%. What would that do if margins in the average company went to 16% from an average of 11?
Be crazy.
It would be nuts. So I don't know that we're there. I don't want to bet the farm on it, and I'm still going to try to be maneuverable, but I don't think we can discount it. And something I saw this morning, and I wish I had the picture, but I don't, was that there was a tweet that someone put up this morning that showed the whole adoption cycle of mobile phones, the internet, and then of ChatGPT. And basically, ChatGPT has done more in 3 years as far as adoption by users. They already have 800 million users, and that's just ChatGPT. That's not the whole LLM market. And it took cell phones something like 10 or 20 years to do that. It took the internet a little quicker, but still, you know, half that time or a little bit less. AI has cut the adoption time frame down at this point by magnitudes, by 3 times as fast an adoption as we had before. And that has to do with more people on computers, more internet connectivity. The mobile phone and the other led up to this, and they were part of it. But again, just add 3% knowledge and intelligence to every household. How much more efficient could you be if you actually can use it and choose it? So I think that's a big part of things. There's also one other thing I just have to say along that same line of how positive and how good it can be and all that. You need to go on internet right now or on Twitter and find the article that was written by, it's like SYS or PSYS or something like that, about the degenerate economy. And how they talk about why we have now Howard Linson was the first one to coin that from StockTwits and from social, can't remember his, but hedge fund. He coined it first. But the degenerate economy, this guy explains in great detail why the millennials and a lot of the younger generations feel like they've been locked out of wealth potential, which is why they are going for the 10 to 1, 100 to 1, you know, basically just bet it all or lose it all, because there's just no real way to build it the old way. I don't believe that's true, but I definitely believe and understand why they believe that. So there's a lot of comments and things like that about it. And his article talks about, as he winds it down, about invest in that. It's certainly the way the trend is going with polymarket betting, you know, all these things. And, you know, don't invest in the actual crypto coins, invest in Hood. You know, and
Tommy, going back to the companies and company adaptations. So you're saying that this huge increase, right? And bullish, right? So are you saying companies are bullish or bearish or inflationary? I mean, they're just going to have to hire a bunch more. And are you getting the point that we're going to get this unexpected bump, right? Companies are going to have to make adjustments, but you're not sure that bump can continue at that rate. Is that what you're saying? That companies may adjust? Okay.
I mean, well, no, I'm saying it's a very intermediate to long-term bullish scenario. Because remember, I've been preaching to you guys in the other show, and when I've been here a few times this year, all year, about the demographic cycle that's about to come through and steamroll the crud out of everything. Okay, so if you add AI on top of that demographic cycle, And it really is magnitudes larger than the internet or mobile phones or the personal computer as far as it's adopted around both US and around the world. Then no, I believe it's an extremely bullish scenario, and I believe it's an extremely big scenario for basically every company, not the AI companies. And I think that's the part that's being ignored.
Yeah.
Now, I mean, listen to what we're stacking up here. We're stacking up demographics. We're stacking up a new huge innovation cycle that doesn't just affect personal and all that. It's going to sweep through all businesses, period, big or small. We're stacking up lower interest rates. Basically, you're right on that as well, Dennis. That is coming, whether it's January or not. But I'll tell you this, if it doesn't come in January, that is a personal and political decision. It is not a decision based on the economy.
I think so too.
And I don't blame him. Trump's just pissed him off so dang much from all the comments that he just is. He doesn't want to go out feeling like a patsy. The problem is he's going out fighting the actual data he says he follows. And that's not going to look any better. And so I get the point, but here's one of the other things I will say that I think that's hard to factor in here is that let's say we do go to, even for just a few quarters of double-digit inflation, or not inflation, a double-digit GDP. And then from there, we settle down in not 3%, but we settle down to 5% for a while. That supports a heck of a lot higher than a 2% inflation rate.
It does.
And no one is talking about that or accounting for that. The battle for inflation coming down is basically wanting to get back to 0%, like we've had for so long and people got used to, not looking at where are we in this actual cycle. I mean, I've said it for a while. I mean, yes, the demographics are part of it, but businesses I talk to, people I talk to, all that, whether you like Trump or not, they started this last year and a half with a lot more belief in the economy, belief in what companies can do, belief in potential businesses, belief in what our opportunities are than we have seen in 5 to 10 years. Now, it is sad that basically everybody in Washington, both right and left, seem to be fighting for any progress to get done based on this idea. Whether you like it or not, so far it seems to be working pretty good. Tariffs are not hitting nearly as hard as everyone expected.
For sure.
Other countries are eating it because they need our business. I said that from the beginning. Yes, it's going to affect, but these countries need it, and they have been soaking us for a long dang time because we'll pay it. We want it. And so now you're in a position that this is kind of flipping a little bit if we can hang on. Are tariffs going to be inflationary? Absolutely. But at the same time, if our economy grows anywhere near, I mean, even 5 or 6%, that changes every single equation we have been working with for 2 decades.
I want to go into what you were saying that, you're talking about, and again, GDP, but more efficiencies for all companies. That's where I'm focusing to, because this is, the last year or two, it's been like NVIDIA's year, like we're going, I just quote, NVIDIA's up 1,000% in the last 3 years. And it's been the obvious AI play. But I think, if we're all of a sudden going to talk about efficiencies with all companies, there's going to be a lot of not so obvious plays. Like there's going to be a lot of like users of AI start benefiting here. Like, the AI companies themselves, like the AMDs and the NVIDIAs, and we know, there's a list of 100 companies have really benefited here. But we haven't seen, the other stocks benefiting. But if users of AI start to get more efficient, these companies that are actually using AI get more efficient here, that's good for those stocks as well. So where do you go? Like, let's talk about 2026 picks. Do you just stay with NVIDIA saying if everybody's going to use AI, it's great for NVIDIA and we'll just stay with it? Or do we actually start looking at those users of AI and start looking in those areas where those companies have, a lot of them have lagged?
Well, that's why I moved to do a defense fund. And that's why I moved
what fund? What did you just buy?
SHLD. And again, just so the chat remembers, I don't look real good at chat when I'm on here. So y'all are going to have to, if there are any questions that need to come in, y'all are going to have to play them. But yeah, I mean, it's a smaller fund. It's an more active defense-based play. I like that cup and handle right there on that daily that's down towards the bottom. I mean, again, it's just had a good setup. It's there. And I believe that we have a chance that those are the areas that can benefit from AI while some of the other stuff is slowing down. I mean, we've talked, and again, I'm not calling it a buy right this second, although I don't think it's bad. But I mean, let's be realistic and let's look at Palantir. I mean, this is really the second level of AI to where, okay, what if Palantir starts acting, and I understand it's gone up a ton, but what if it starts acting and it's the next leg of what NVIDIA has already done? It has a lot further to go. If it starts implementing and taking this into corporations and companies like it does right now, it's basically the person that goes into the company and saying, hey, all this cool stuff you don't know how to use, I'm going to basically make it practical for your company right now. And it
doesn't help that Trump likes the company as well. You know, he likes the CEO. That doesn't hurt you either.
Yeah, I mean, but help or hurt or whatever, they are the only ones that so far have been able to articulate how they can make it help your company well enough. And this is why their stock is doing what it's doing. I mean, it is that. Yeah, it doesn't help, but it also doesn't hurt that they got a bunch of defense contracts first.
No, that I meant doesn't hurt. Doesn't hurt.
Well,
sorry.
Why would they get the defense contracts? Who usually gets contracts first? The best.
Lockheed Martin.
The people that are up front. No, in a new like this, a new technology, they're going out and they're searching out who's got the best thing right now and how can we buy it. Especially defense, because they don't want it in somebody else's hands. And so that's really where Palantir's first big contracts come from. And now they're going straight to corporations and saying, we can implement across your supply chain. You're this, you're that, your factory, your employees, your human resources, your whatever. And it's working. So I'm not saying, like I said, I'm not saying it is the chart is set up as a buy, but the story is early. It is not late. And someone else will probably come up and take them over in a few years, but that's going to take a minute.
I don't know if the market caps keep going up, nobody's going to be able to afford to take them over.
And it very well, no, I don't mean take them over that way. I mean basically outwork them, become a better AI implementation company. But right now, they're the 800-pound gorilla. And like you said, as fast as they're growing, it's just going to make that harder and harder and harder to overcome. And so from that stance, until another technologist really comes out and blows them out. But to that stance, that's really what we're looking at, is we're looking at companies that are kind of going in and implementing these. You're right. Lockheed Martin's doing it. RTX, Raytheon. I don't even know what the new name is, but whatever. All of those, they're doing it. And again, that's why defense is kind of leading out some. And right now it looks like it's pretty well. And it's probably between it and transportation, which again, what else can benefit hugely from AI and logistics planning more than transportation? You know, so again, it's a scenario that those are two areas in industrials that are some of the strongest areas right now. Truckers have looked horrible, but if you throw up a couple of the trucking charts out there, some look really bad, but some are really starting to come back. I can't think of any right now, but maybe Martin, I believe, is one. I can't even remember any of them.
Well, Riders come back, you know, like a lot of them have come back up here.
Well, so. Ryder's a different animal because Ryder has a lot of rental fleets and Ryder has a lot of actually maintenance fleets that they do for other companies. So Ryder's a little different. I'm trying to think of some of the actual ones. Like Martin was on one of the company. Who are the big? Dang, why can't I think of the big trucking company?
Well, XPO Logistics.
Well, yeah, that's a great one to think about, one that's come out. But again, that's one that the only reason on it that while it's a strong one that I might make sure I had my knowledge out there is I'd make sure I went back and checked. I hadn't checked in a while, but make sure I'd go back and check at how tied to Home Depot they are right now. They used to be extremely tied to Home Depot and Home Depot deliveries and all that, and that might not be the best one. But see, look at Old Dominion here. This is a weekly chart we're looking at right now. If I drop this down to a daily chart, I mean, you're kind of have your little cup and handle starting there after
we do.
That's almost a full year.
I mean, I'm sorry to cut you short. We're up against the clock here on pre-market prep.
No problem.
This shortened trading week, though, but we'll get to chat with you again, maybe get a deeper look at those charts tomorrow on the Stock Trader Network at 10 a.m. Always a pleasure listening to your fundamental and technical analysis. Thanks, Tommy.
All right, guys, have a great week.
Tommy, great stuff. Appreciate it. So gold and silver, we haven't talked about this yet, but the silver move last night was nothing short of epic. We blasted off, and if you have silver, like the silver futures, blasted off to over 80 last night. And we have just turned around, and so we were up almost 10% in Sunday night trade. Just like the follow through, epic, incredible here. And we have turned around and given that all back. And now we're actually down 6.5%. So we've had a 17% fall almost from where we were last night in silver. It does appear like this looks like upside capitulation from Sunday night, where SLV is going up. And, and we got to give this perspective here too. I mean, silver has not had a move like this, maybe ever. So you've got silver that SLV stayed between 20 and 30 for 7 years. Now it goes from 30 to basically 80. And if SLV was trading last night, but it didn't open until 8 o'clock, so it wouldn't have reflected it, you would have seen it up over 80. That is unbelievable move. Like, I know we're worried about inflation going forward. People are worried about some stuff. They're going into precious metals. They're hiding there. But to just take and run silver, this move in silver, and people were asking me, like, do you want to buy silver? Let's go buy silver. I mean, this is the definition. Like, if you looked up Chase in the trading textbook, they're going to talk about silver. And the last time silver did this was when it went from like 25 to 50 in a heartbeat. And then it went into a 15-year bear market. So I don't know if I'm coming in and just saying this is silver. Like, the market cap of silver overall is now above NVIDIA. I mean, this is an unbelievable move, but I don't think, I think what you just saw was the upside capitulation blow off top. And now you're getting some pain here from people who were chasing it last night. Now some panic even. And now it is spreading over into GLD as well. Because GLD has been marching too. Nothing like silver. But gold has been moving up. I mean, from September, we're up 300 to 416 on the GLD. It's up 30% in 3 months. Gold doesn't do this either historically. So lots to consider. I know you got the digital gold up there, and we're going to give Hive some love here as well, because Bitcoin is really, not doing much at all. But this move in gold and silver has been nothing short of epic here. I got to think like this is just, gone to the point of ridiculousness.
Joel, any response to that before I get to Hive?
Man, just crazy moves. We'll see how, we'll let them shake out. What's good when you get these moves, these big moves, is that, you got setups, and you got the setups, you got the levels from Friday. You can, there's a lot of ways to look at it. Once you make a bottom here, some sort of retracement. I mean, the gold and silver is known, on the COMEX, they're known to put the hurt to people. So we'll just have to see how that, it sets up. There'll be rebounds. There's all-time highs. There's all-time closing highs. So we'll let it shake out. I mean, just if you've been in silver for a long time and, your targets are still at 67 in SLV, don't look at it as that you could have sold 75 or 80 yesterday. Sometimes these levels are seen and not seen again for a long time. But Bitcoin's just stuck. I don't
stuck in the mud.
It's stuck in the mud.
Let's say hi to our wonderful sponsor, Hive Digital Technologies, pioneering the digital transformation through AI solutions and Bitcoin mining. Hive Digital Technologies is a global leader in building and operating cutting-edge data centers from Bitcoin to high-performance computing. Hive is redefining the future by powering the world's most transformative technologies like AI with efficient, green, and clean energy. There is a QR code in the bottom right of the screen right now. You can scan that on your phone to get over to Hive's website, hivedigitaltechnologies.com. There's also a link in the description of this YouTube video. Thanks again to Hive for sponsoring pre-market prep for a lot of 2025. They've been an awesome sponsor this year, and we're very thankful to Frank and the team over there at Hive.
I mean, Bitcoin's stuck in the mud. We've been talking about the IBIT a lot, and it's got this level of 48.33. It's hanging out here at the lows for a long time, but we saw Lululemon hang out at the lows for a long time and then actually ended up going higher. So support is support until it's broken. You know, a lot of times, you know, you look at the chart and you think it's been down here too long. It's definitely going to cut through it. Doesn't necessarily have to do that at all. So, I mean, you've got good support here on Bitcoin, continues to hold up here. Is it necessarily a bad thing? Just question, like in the context, and we can still go a few minutes over time here because we're, you know, off the weekend. Is it necessarily a bad thing? I'm going to ask Joel, that silver and gold are starting to show some weakness here. Is that I think it competes a little bit. Like you got digital gold, which is Bitcoin, and then you've got silver and gold, and with silver and gold showing some recent weakness, I'm not sure that's necessarily a bad thing for Bitcoin.
I don't know. I mean, I've never seen such a, a long, I mean, this has been a long period of consolidation in the Bitcoin. And
it's a huge level.
It's just, but that's a good thing. I mean, you don't have to make a call. You could say, if obviously basis the futures here, if you could clear 95,000, I mean, there's a lot of room up, on the upside, decent retracement of the big move. And if you can't hold that level, if you can't hold that 85,000 level, I mean, I think the uncle point for Michael Saylor is right around 75,000. And I think just like, when people got over leveraged and, silver, and I know heard the margins and the retail customer, got way heads over heels, then the trading gods and come and flush them out. So, I just, you got the major resistance up here and you're holding support. So tradetherange.com until it gives you a clear indication. But 3 down months in a row so far for Bitcoin, red candles. But support resistance, trade the range until it breaks.
We didn't get to all the headlines here. Yes, DBRG rumored that SoftBank is going to take them over. This was rumored before when the stock popped from 10 to 15. The rumors are there again. We don't have an official announcement, I don't believe, here yet, but that is obviously one of the major headlines this morning that we did not get to cover. We will continue. The show does not end here, folks. It does not end. If you want more coverage and you want more trading ideas and a little bit more hand-holding, which is what we do over in the STN room, come join us over at Stock Trader Network. Do your 7-day free trial. Come check it out. You don't like it? Unsubscribe. But if you do like it, stick with us because we had a pretty darn good year. I'll be posting my yearly results, which is trades that I'm doing over in this room. And obviously there's lots of opportunities there as well. So let's go over and look at some of these other stock trading ideas here for today. Setting up, potentially my acronym, for next year, but also just, looking at leaders to laggards in the January effect. We're going to put that list together because that list is going to get implemented. We're going to actually execute on some of these trades here later this week, positioning ourselves for maybe a change of leadership, at least maybe only temporary, but that January effect, obviously, a lot of times very pronounced.